Hello, everyone. I'm extremely excited to be with you on this very first strategy day for Diginex as a public company. Today, I'm going to lay out our business model at a very high level, how we identify the key opportunities that were laid out by Shane, and how we position ourselves for that future. So the key vision of the company is to bring digital assets to the world, individuals and institutions alike. This vision statement is as much about making these assets more accessible through education and intuitive product offerings as it is about working with regulators to make this asset class available to the world. Diginex is the first and only digital asset ecosystem comprising a crypto exchange to be listed on NASDAQ. This statement is important as it demonstrates a level of transparency and governance that this industry has been significantly lacking to date. In just the last few weeks, we've seen a clear demonstration of why an SEC-approved company with NASDAQ standards of governance is needed. Two of the largest players in the digital asset space have had significant issues that have impacted their clients. One around governance saw a key man being arrested by Chinese authorities, and this had the effect of freezing hundreds of millions of dollars of assets on their platform. The other saw all of its key leadership indicted by the CFTC, highlighting significant concerns around regulatory breaches, poor KYC and AML, and actually the viability of the platform going forward. Early adopting institutions need to mitigate reputational risk. And the Diginex Group ecosystem is a unique in offering a regulatory-focused platform with the added benefit of being listed on the world's premier technology-focused stock market, NASDAQ. So as Shane laid out, the industry and the asset class is growing fast. We're focused on two key areas within this industry. First of all, derivatives. The majority of institutional investors need derivatives like futures and options to optimize their portfolios. There are several pieces of infrastructure missing from current offerings, which we've addressed in our first products and future roadmap. And Neil Shepherd, our COO of Financial Services, will focus on this product in some detail in the next session. The other opportunity is the disruption that this technology can bring to capital markets. As Shane mentioned in his overview, blockchain technology has demonstrated its capacity to move value fast, efficiently, and cost effectively. There are already numerous examples of illiquid assets that have been tokenized. That means structured into an SPV and represented as a highly divisible asset on a blockchain network. Our capital markets business is a securitization advisory firm that offers clients these types of digital securities. So let's talk about the size of these opportunities. Derivatives have started to emerge over the past 2 years, mainly in the form of a perpetual swap, a product that Neil will be discussing in more detail. Spot volumes today are continuing to grow. We're seeing increased institutional adoption, but at 3 times the spot market, when we compare derivatives of this market to the traditional markets like FX or interest rates that have derivative markets that are many hundreds of times the spot market, we can see that there's meteoric growth potential to this market. Represented here is the pink market around the current spot market in turquoise and the current derivative market around that in dark blue. We can see that with appropriate product and infrastructure, this market can grow significantly, potentially by as much as 20 times. The market opportunity from here to disrupt the capital markets is a different level of potential altogether. But we are far earlier in this development, and this is going to take time to draw out. The basic opportunity can be understood by seeing the size of the market that was disrupted by Amazon through its usage of the internet. Over a 25-year period, Amazon went from a small startup controlling around 14% of global retail sales. And now, obviously, with the speed technologies compounding, it's highly unlikely that it's going to take 25 years to see blockchain disrupt capital markets. Indeed, we're already seeing a broad swathe of institutions start to engage with this new technology. The two key barriers that are going to impede adoption are unclear regulation and investors' own infrastructure. But regulation is moving faster than we could anticipate. The SEC clearly stated recently that they want to have a regulatory framework around tokenization. Hong Kong's SFC last week announced initiatives to adapt their framework further around digital securities. And the European Union said that they plan to act in concert to provide unified clarity around this asset class. Our view is that institutional investors will move faster to accommodate this asset class, largely due to greater Bitcoin adoption across the board. The infrastructure for broader blockchain-based securities or digital securities is extremely similar. And on the back of fiscal and monetary stimulus, we're already seeing from global central banks, the next sizable Bitcoin rally is likely to be sooner rather than later. And that very stimulus has been the notable reason for much of the institutional adoption over the past year. MicroStrategy's CEO was quoted as saying he felt like he was sitting on a melting iceberg of $500 million in cash before he eventually decided to convert it into $425 million of Bitcoin. As Shane mentioned, Paul Tudor-Jones, the macro fund manager behind Tudor, has now allocated even more to Bitcoin, citing it as the fastest horse in the next great monetary inflation cycle. This week, Stanley Druckenmiller, arguably the world's most famous bond trader, stated publicly that he now holds Bitcoin. PayPal have been watching over the last year and a half as Square's Cash App, a payment app, increased sales of Bitcoin quarter over quarter consistently, with last quarter coming in at $1.63 billion of purchases on that platform alone. And of course, Square themselves adding $50 million of Bitcoin to their own balance sheet. On October 21st of this year, PayPal officially launched their own service, immediately opening up 26 million vendors across the globe to cryptocurrency holders. Goldman Sachs have had a Bitcoin trading desk for several years, and recent hires have suggested this is now broadening into digital securities. Singaporeans were recently surprised by DBS accidentally revealing their plans to offer cryptocurrency trading to selected clients. Nearly all of these developments have been made in just the last few months. Momentum is clearly compounding. So how does the Diginex business model address these two sizable opportunities? Well, first, we've built our own exchange. Equos operates under an exemption from the Monetary Authority of Singapore within their new Payment Services Act. A regular question is why the industry needs another exchange. So here we present some of the many differentiating elements. We have a clear regulatory focus with an exemplar KYC AML process, including tools to analyze provenance of any crypto assets that enter our platform. This is a core requirement of any institution, but also most high net worth individuals. Most people don't want to own Bitcoin that's been used in criminal transactions, and we screen for this. Institutional investors also require some level of segregation of duty. You don't want a Nick Leeson style situation where your trader is covering your back office as well. So we have sub-accounts for different functions ranging from operations to trading to treasury management, audit, and compliance. As far as we know, Equos is the only exchange that offers this basic need for institutional investors. Another key to unlocking billions looking to allocate to this asset class, and touched on briefly by Shane around asset management, is managed account functionality. A key part of traditional finance post the financial crisis was the capacity to invest in a fund without the same credit risk or mandate drift risks of investing directly. Managed accounts will allow investors in the crypto space to allocate to a fund manager within the Equos ecosystem, providing a far better credit, a regulated counterparty, but also the ability to halt trading if a manager veers off mandate. Today, we only list Bitcoin and Ethereum, the network asset ETH. The focus on derivatives across the market is mainly around these two assets, with Bitcoin especially becoming core collateral to many players. We do intend to list more crypto assets, but future listings will go through a process similar to that we see today on traditional exchanges. This will serve as a first layer of investor protection against many illegitimate projects. Most exchanges in this industry offer no such protection. Finally, innovative products and infrastructure are heavily centered around the derivative opportunity that Neil will outline later, but includes things like an improved approach to the perpetual product, portfolio margining, and cross-asset collateralization, all rolling out in the coming quarters. Which brings us nicely to the roadmap. Our current offerings include spot markets in the highlighted pairs. This quarter, we will see the first rollout of derivative products with Bitcoin perpetuals coming first. On-exchange credit will be offered to select liquidity providers, and by 2021 first calendar quarter, our fiscal year fourth quarter, will bring borrowing and lending. Our first fiscal quarter of 21-22 will see the launch of options product and portfolio level margining. Other key features targeted more at retail will feature later in the roadmap. Again, more detail on all of this will be covered by Neil up next. So, as discussed, the exchange is quite differentiated in terms of offering and roadmap. However, we are also a very nascent exchange, having launched just 4 months ago. The growth of daily volumes organically from zero to a consistent $5 million per day has been hard work. We don't make markets on our own exchange, which is an important requirement for professional traders. They've recently suffered at the hands of pretty much every other exchange who trade with full visibility of the order flow against their clients. Many of our institutional clients obviously need to see us get to a meaningful amount of volume on the platform before diving in, and I am pleased to share today that institutional clients onboarded is fast approaching 50 as we gear up to the perpetuals launch. Diginex Group is obviously a lot more than just an exchange, as I'll set out later, but for this slide, we've assumed that it was just an exchange and applied today's valuation in the stock market to it against some of the recent industry valuations. And a couple of important comments here. First of all, these are private market valuations and not always entirely clear. For example, we know that Coinbase raised at $8 billion in October 2018, but whilst we've heard from multiple sources that the IPO is estimated at $15 billion, it's not documented anywhere officially. Similarly, we heard from several members of the VC community on the West Coast of the US that Binance were doing a raise at approximately $20 billion in March. We have multiple sources showing that Kraken did indeed raise at a $4 billion pre-money in mid-2019, and FTX also raising at $1 billion just 9 months after their launch last year. If we assess these valuations on the basis of multiples of daily volumes, we can ascertain that more regulatory-focused exchanges command significantly higher multiples. As a note, this particular slide is using the last official valuation observed for Coinbase. With the rumored Coinbase IPO valuation, you'd obviously see an even greater divergence between regulatory-focused firms and the others. So, obviously, the exchange is central to what we've built, but there's a lot more. Here, I'm going to take you through the rest of the ecosystem and how it supports and accretes value to the exchange. So first up is our separate, segregated custodian, Digival. Digival is in process of license application for digital security custody with the FCA, the UK regulator. Digival is currently being integrated into the exchange as part of a multi-custodian offering. Clients will be able to then select their own custodian for our different partners, our first one being BitGo. Digival is CREST certified and Cyber Essentials Plus accredited for cybersecurity. The Cyber Essentials Plus accreditation was designed by the Ministry of Defence in the UK, and we are the only digital asset firm that has received this accreditation. The team is led by ex-Ministry of Defence and ex-Royal Marine Commando, Rob Cooper. Rob has hired and built an exemplary team and product, which continues to add features and functionality required by some major financial institutions. Our offering operates out of the secure vaults of Malkromit, the highly secured, strategically located storage facilities for valuable assets. The importance of a reliable custodian cannot be overlooked. Indeed, it's the foundational piece that major financial institutions look to solve before even engaging in this asset class. When you have such a solid custodian offering, and as balances build, we add other features like borrowing and lending, you get to a point of stickiness around these assets. And this is very similar to the investment bank prime brokerage model, where you have core collateral and you can borrow and lend and build derivative optimizing strategies around your base capital in a capital efficient manner. For retail, this is like having your own private bank account around digital assets, where again, borrowing and lending and portfolio underwriting and overwriting are essential tools for wealth protection and generation. The stickiness to the platform creates increased balances, which becomes more accretive to the offering and massively increases profitability. Ultimately, this is what this technology facilitates and where we're going. Again, it really helps client acquisition that we have a regulatory focus and we're publicly listed. So next we have Diginex Access. Access is a multi-venue algo trading platform. The platform effectively aggregates pricing across some of the largest exchanges and of course, Equos. This allows new traders and fund managers to operate across multiple platforms with ease. Algos refer to algorithms that allow people to employ automated trading strategies. A good example of this would be an order that buys a very tiny piece of an order in regular slices, like every minute over the course of the day, to give you an average price on a larger dollar amount without actually impacting the price. For arbitrage and algo trader, this sort of a platform is a requirement. Some of the earlier players have built makeshift systems to combat their problem, and there are a couple of other players who offer a similar service to ourselves. However, we have a significant edge. We've partnered and integrated with two of the world's largest trading technology firms to integrate Access into both of their order management and portfolio management systems. This provides us a huge pipeline of institutional clients who want to start trading digital assets and use their current operating systems to do so. FIS is a dominant player at a 100 billion market cap, counts among its clients some of the largest global investment firms and many of the Fortune 500 corporate treasuries. Itiviti is an up-and-coming competitor and covers a broad range of hedge funds, algo traders, and market makers. Both of these providers have exclusive agreements in place with Diginex for the trading of digital assets. Later in the day, I'm going to be sitting down with Rob Mackay, the CEO of Itiviti, for a one-on-one. We're going to discuss a bit more around the intricacies of their offering and how they're focused on the growth of this asset class and why they chose Diginex as their partner to facilitate this growth. Bletchley Park is our asset management group. We're a regulated asset manager in Hong Kong under the Type 4 and Type 9. That's for advising on securities and asset management. We also operate out of Switzerland under the ARIF self-regulatory framework. As Shane mentioned, our first fund is a fund of hedge funds. They provide a market-neutral approach to this asset class. We invest in managers with an alpha-centric strategy, and our portfolio covers liquidity provision, arbitrage, algorithmic, and quantitative strategies. The fund is positioned to provide an on-ramp for institutional capital wanting to access the unique alpha available in this asset class, and performance of these managers is solid, with extremely high Sharpe ratios. Over the course of the 2 years we've spent building and designing the portfolio, we've met nearly 200 funds. This process of due diligence has provided a unique insight into the issues around the capital efficiency and product design issues that the traders in this industry face daily. This in turn has led to much of the product and infrastructure design for both Equos and Diginex Access, which Neil will be framing shortly. The asset management side of the business is also where we'll be launching our listed products from, starting with a cost-effective, redeemable tracker designed for the European stock markets. The final piece of our ecosystem is our investment bank. Equos Capital operates under an FCA-regulated entity for corporate finance and securities distribution. We're also in the process of licensing this business in Dubai under the Category 4 licensing framework. So there is a sizable pipeline on the securitization side coming out of this region. This business is effectively a securitization advisory firm, providing structuring and advising on deals, designing smart contracts, and sourcing investors through broker relationships that we have in Japan, Singapore, and Hong Kong. Through our UK arm, we can also access 11 different markets across Europe. Investors are given the choice to buy the security in the traditional form, i.e. paper or in digital, while we position ourselves as a protocol agnostic firm, we've only built on the Ethereum network today. We have a head of blockchain strategy who's constantly reviewing and assessing new protocols and designs our smart contract. Equos Capital today is a quiet securitization firm working towards building the rails to broader institutional awareness of this asset class. In time, Equos will be licensed for securities, and Digivault is already in the process of being licensed as a digital securities custodian. And that will then provide the marketplace and the natural custodian for all of Equos Capital's distribution pipeline. Having this regulated vertical will help expedite the growth of this opportunity. So now you see the complete ecosystem under the Diginex group, and it's hopefully clear everything pulls together, drives business to Equos, and accretes value. The digital asset opportunity has been massively expedited this year with the advent of a global pandemic. Next year is likely to see significant acceleration in the value of Bitcoin and broader digital asset adoption. Diginex is the pure play digital assets company and the first and only to be listed on NASDAQ.